Well, it was the party that broke the casino. Now, some people asked me last year, why did you call, the stock market and the capital markets a casino? Because literally, for a couple-year period of time, that's what it behaved like. The allocation of capital being done properly, where people were looking at balance sheets, income statements, cash flows, understanding the products. Is the product working? What are happening with profit margins? Nobody cared about that. All people did was chase return. In fact, the companies would lose more money, drove stocks even higher. It was insanity. In fact, one of my big complaints about what the Fed did is you can't throw that much money into the system, not only not create inflation, but misallocate capital in a horrific way, which is exactly what we did as a country. We just torched a lot of money. So what has happened? All the U.S. equity market indices have sold off. S&P is the gray line at the bottom. That's off 21.5% for the year. The Dow was down 20-some-odd%, but this last month has had a big bounce back up, and the Dow is the red line. You can see that at the end. And then the NASDAQ is down 33.5% because that's where a lot of the technology and the companies that were just burning money rested. Interesting, here are the top performing sectors. Energy for a second year in a row. Best performer. At the bottom, communication services, consumer discretionary, real estate. Obviously, technology has been hit, and it falls in a number of those different buckets. Actually, let me back up there for a second. This is one important thing for all of you, for me to express and share. When equity markets go up, they tend to go in a stair-step pattern, pause, maybe a little sell-off, grind up. It's a smoother process on the upside. When equity markets go down, they go down in a big jagged sawtooth pattern. They fall off a cliff, then they get a big bounce, bear market rally, then they fall down, they get a big bounce. And they just keep heading lower, but it's very jagged. So be careful of thinking, oh, things are all back, because quite often at that point, boom, they collapse again, kind of like what happened this summer. We had this big bear market rally, and then boom, got swooshed back down. Now, the biggest bubbles have burst. AMC stock, a company whose business model has been destroyed by online streaming. They've destroyed their balance sheet, lost so much money. COVID lockdowns killed them as well. That stock's down 89%. How about the ARK Innovation ETF? The hottest ETF, Kathy Woods. I invest in companies that don't even make money. I'm so leading edge. Yeah, well, you got smoked and all your investors got smoked. Emerging Cloud Index. Oh, that's the hottest thing because everybody's working from home. Okay, there's some real companies there, but that's gotten smoked. And then SPACs, Special Purpose Acquisition Corporations. I mean, the insanity of this, of the hundreds of SPACs. Give money to a sponsor that you don't know what they're going to go buy. You're just giving them a blank check to go buy something. And by the way, they'll make money even if you lose money. Didn't work out very well for most investors in SPACs, down 79%.